this is Surya Saha, and welcome to the Insurtech Story podcast, the platform to spread knowledge on insurance innovation, digital disruption, and entrepreneurship. Our website, insurtechstory.com, and we are available on Spotify, Apple, and Google. Today, we are going to discuss on the topic prioritizing predictive analytics for the P&C Underwriting. And for now, I'm delighted to welcome our guest, Vivek Pandirajan, who is the SVP and Head of Technology and Data for P&C Solutions at Swiss Re. Prior to joining Swiss Re, Vivek served as SVP, Global Delivery Head at Intellect SEEC, a leading Insurtech and data company managing an organization of 500 plus associates to oversee global product implementations and program deliveries for P&C clients. Before Intellect, Vivek worked with several Fortune 100 firms such as Chubb and JP Morgan Chase in the United States, overseeing enterprise-wide IT initiatives such as digital transformation, robotic automation, policy administration, and servicing replacement, credit and operational risk technology programs, to mention a few. Vivek holds a Bachelor of Engineering in Computer Science from Vellore Institute of Technology, popularly known as the VIT, in India, and an MBA in Marketing from Fairleigh Dickinson University, United States. Besides, he also enjoys reading motivational and personal development books in his leisure times. So, Vivek, welcome on board, and we are truly excited to have you for the show.
Thanks, Surya. Thanks for having me. It's a pleasure to be on your show.
Would you like to tell our audiences a bit about your role at Swiss Re?
Sure. Let me start by just giving a quick intro about what Swiss Re does, and
Right.
then I can get into the details of my role. Swiss Re, if you haven't heard about it, Swiss Re is one of the world's largest reinsurer. And so essentially in layman terms, we insure other insurance carriers, right? Primarily. And so essentially
Yep.
what that means is we provide additional capacity for insurers so that way they can take on additional risks and spread their portfolios as well. So Swiss Re as such is a very long-standing company having a history of more than 160 years, and so over the last few years, what we have been focusing on is on another area within Swiss Re called solutions. So what this essentially means is over the course of many years, we have become experts in managing risks and assessing risks, right? So
Yep.
underwriting is obviously a core strength, and so we take a lot of pride in that. So to help do our to help assist with underwriting and also with risk measurement, so we have built homegrown solutions that help us calculate the risk, predict risks, a lot of analytics based solutions. So which over the past many years we have been providing these solutions to the insurance carriers across the world. So what I do specifically is I head the technology and data function for these solutions globally for property and casualty side of things.
Right. Of course, apart from what you have just mentioned, there's another way that we at least know Swiss Re is from the thought leadership part in insurance, that is as part of your Swiss Re Institute. So that's another way that we actually remember Swiss Re.
That's absolutely correct. So that's something that we take a lot of pride in,
Yep.
and also another division in Swiss Re is the Swiss Re Institute that
Yeah.
produces a lot of thought leadership, as you said,
Mhm.
which market really follows and really holds us to that. So.
Yeah. And you also have an important initiative come up a couple of years back, I think, if I'm not wrong. That's from the Insurtech side of it. It's IPTQ.
That is correct. So, would you want me to talk a little bit about that?
Yeah, absolutely. I mean, that'll be, kind of a good introduction for audiences as well.
Sure. Yeah, no, absolutely. So, like I mentioned, right, solutions. So, IPTQ is also one of the solutions that is part of Swiss Re, and although it doesn't fall under my sort of purview, but
Mm,
what we essentially do is again, we help other corporates, other companies, uh, you know provide insurance capacity, right? So if you take an example of, let's say, one of the world's largest, furniture retailer.
yeah,
So when you have essentially, when you're buying some products, where retail and you like to purchase an insurance on the product.
yeah.
So typically, what we tend to do is, we provide white labeling kind of a capability where
Hmm.
behind the scenes it's all IPTQ assets running. So it takes you
Yeah,
through the course of the whole process of capturing your information and codes and policies and whatnot. And so by doing so, we help our clients get to market pretty quickly as far as insurance products are concerned. So
right,
that's one of our flagship products that we have. Very similar to also the offerings that I help run as well.
right. Interesting. Very interesting products that Swiss Re is coming up with, and of course, thought leadership is something that is the ultimate one that at least we have come across. Just moving on to the discussion for today, and you being in the underwriting space as well as from the PNC side of it. Within the PNC underwriting sector, the predictive analytics function has witnessed noteworthy momentum, right?
Mhm.
And significant attention, has been received from the industry leaders as well. So, what do you think PNC insurers are prioritizing on predictive analytics now?
No, I mean, as you said, predictive analysis, analytics or analysis, right? So
Yeah,
it's an extremely important function for not only for reinsurers but also for insurers. It's that is probably because of a couple of things. One is over the last 2 decades or so, there's been a lot of focus on data, right? So
yeah,
data, building the data, capturing the data. If you had data in some form or the other, all the companies have invested a lot of time and money in digitizing the data. So now you have a lot of history. If you look at companies, like Swiss Re or other carriers like AIG and Chubb, you probably have 100 years or at least dating back to the 1940s or 50s data from that. So looking at historic patterns and also looking at reading through some of the uh, the losses incurred, etc. So that's I think that has been the focus for the last 10 years or so. I think companies have done well, right, in that. But with the current scenarios, what's happening is the environment is changing a lot.
yeah,
It's becoming very unpredictable. Like if you see, a recent event, the Hurricane Ian that hit in the U.S. The insurance industry has gone through significant amount of losses, right? So in billions, in double digits. So
yeah,
uh, previously, such incidents, such events used to be a one in a 15 or one in a 20 or 2 decades kind of event. But now such events are happening in large scales, much more frequently. So historic looking at historic data provides you some sort of perspective, but I think the focus is now shifting to looking forward, looking at better ML models, looking at building your own sort of models and becoming more successful in predicting where the losses would be, right? Like, if you look at the geopolitical situations in Ukraine and Russia, look at what happened with the airplanes.
Mm-hmm.
The entire airline industry was stuck there. So many different flights were stuck there. The entire industry was having an impact because of the leases, etc. Uh, it's there's a lot of focus, and I don't think people have truly gotten ahead of it. I think I think people are on the journey where they're trying to refine their models, and but definitely, having like, at least I can speak from Swissy perspective, where we spend so much time and focus on, like, for example, the outputs coming from the Swissy Institute,
Mm-hmm.
where we build models, etc. Uh, I would say a good portion of the models have been doing quite well. But again, it also depends upon now also what kind of data you're trying to get, right? So historic is probably not going to help. So, what we really need to also have in the mix is real-time data, and also forward-looking data. So because again, the risk perils are changing, right? In terms of, looking at, automobiles, driver patterns is one thing, looking at driver behavior is one thing, but now if you're looking at an EV car and an automated car, the risks are totally different. So the historic models are not going to help you there.
I mean, the entire journey of analytics and how the predictive element, gets attached to it, especially from the underwriting point of view. It's certainly it's going to reap a lot of fruits for the industry, but it's I would say this real potential is still not being realized uh, from an underwriting standpoint. If I'm correct me if I'm wrong. Um,
Absolutely. Absolutely. I
and,
agree with that.
and on the same point, I would like to put forward that the predictive analytics part are primarily used to find patterns and relationships, right, that cannot be found just by humans. And that's one of the part how the combination of human and technology can do wonders for the industry. So how do you see this technology to be of use by the PNC sector in specific from the underwriting viewpoint?
Right. So I think, I can quote some of examples that some of the products that we have. Uh, See, at any point in time, right, when you look at analytics, it all boils down to the models, right? So there are two components. One is the data that feeds the
Yeah.
model,
Yeah.
and the model by itself.
Yep.
Now, uh, again, the models have been refined so far based on historic data, and then so now, I think the play going forward is, how can the data change? How can you get ahead of the data, right? Before, or a scenario before it actually hits. Like, for example, could we have predicted a damage like Ian? How well did we do with that?
Hmm.
So, I'm sure, we missed out quite a bit as an industry in terms
Right.
of the damages, etc., right? Because at some point, the storm it just kept, going inward, and you're looking at different kinds of damages. Now, clearly, you're looking at, the whole AI and ML kind of, algorithms helping a lot there, where you first have to get the data. We can't just lose sight of the fact that, we probably, as an industry, we missed predicting such high losses. But uh, I think the focus should be on collecting the right data, right, and then feeding into the models and seeing, how the models are behaving, and tweaking the models, right? So now,
Hmm.
so this is where I think, we, as a company, have been focused. So we use a lot of help on the IoT front. If you're looking at the automated sector, you're looking at, we some of the models that we have, some of the scores that we put out there. There's a lot of focus on, collecting the right data. So it could be, if you're looking at an EV, let's say EV batteries. If you take an example, right, like, this is the whole EV age where it is starting off right now. People just come out and say, okay, and I'm going to give you a 10-year warranty on a EV battery, etc. But nobody has the data. Nobody can predict whether the EV battery will last 10 years or it's going to fail in like 2 years or 3 years, etc. Right now, having the right model, having predicting that model can help the manufacturers, can help the automotive, even the third party OEMs, right?
Hmm.
Help a lot cover the risks. So that's where I think we come into picture in terms of getting real time data, collecting the data from actually the EV cars, and making those predictions, looking at some historic information at the same time, and also speculating based on the models. So how the perils pan out. The
Hmm.
other sort of other sort of areas where we also look at is also claims predictions, right? So uh, as we have some of the solutions that we have, as and when the event is occurring, like for example, we were tracking Hurricane Ian live, and while it actually made landfall, we were able to speculate within few hours. We were able to speculate the losses. Now, if you go back in time, in terms of like again, you're looking at how soon or how quickly, how accurately you can collect the data, right? The
Yeah.
loss data. So previously, people would send out, adjusters. Now imagine a place where the adjusters can't even get to. You're looking at data coming to you. It could be incorrect data. Maybe the adjusters are just writing blank checks,
Yeah.
right? Based on some sort of blank assessment, or in a rush kind of a mode. Now those kind of data can really skew your models for future predictions. But then that's where you get accurate. We use technology a lot. We satellites give you don't give you the accuracy that you look at. We're looking at we have planes fly by, capturing images in high density cameras, and we use image processing
Hmm.
to actually predict within hours. So we have some of the solutions we have. We can show you a before and after, right? Like how did the house roof look like before, and how does the house roof look after Ian made landfall, and just looking at the damages, we actually make a prediction of the loss amount. Uh, so, uh, so that's I think is going back to the point, right? Like you have a model, you have data points, but I think the focus has to be get your data correct. What can you do to get your data sharpened? And if your data is more accurate, you can feed the data into the models, and then you learn from that, and you can tweak your models.
Yeah.
So that's just one other example that we have. Even if you're looking at cyber, right? Like industry, we all know cyber is going to be a huge market as an industry. Uh, but if you look around, very few people are able to give you, accurate cyber assessment of your landscape and then measure your risk based on that. These most of the times you get blanket sort of policy covers, right? Like you get covered for like 100,000 or something against cyber attack or ransomware, etc.
Hmm.
But that's where I think also one of the places where we're looking at is to actually get uh, you know get more accurate information about the peril, about what we are insuring, about the insurer's landscape in terms of what they have, what their assessments are, etc. So we are actually partnering with a very large cloud provider, AWS, to
Hmm.
look at study their landscape and understand what kind of telemetry data that we have, and we run through our models and get more accurate information. Uh, so that's just some examples of how technology is actually helping, and I think that's the way forward into getting more accurate predictions.
Yeah. I think data is actually, in true sense, is going to fuel the growth for tomorrow, be it from prediction, be it from personalization, to any sort of an analysis that we look at for the financial services sector. And you spoke about
Absolutely.
predictive modeling
Mhm.
or modeling in general. So how do you see this technology, helping in the uh, cost part for the insurance industry with respect to, if I have to look at how much an insurer can save if they have to apply a predictive analytics kind of a model?
So savings is the only reason why we exist as a group, right? As from a
Correct.
solutions perspective,
Yep, yep.
right? So if you look at our division, which is reinsurance solutions, what we essentially do or why we actually exist is to provide a cost advantage at the same time to help carriers or other underwriters assess their own risks better, right?
Yeah,
So,
yeah.
you're looking if you look at the entire chain of insurance, uh, if you underwrite better,
Mm-hmm,
it could be, let's say you price better, you understand your risks better.
mm-hmm,
That's what we do. We help highlight or call out the risks accurately. We help, we even expose our models
mm-hmm,
to insurers where they can, as a product, they can actually price. They can run their data, through our models and see how Swiss Re is pricing it, and then they can tweak that. They can learn from that, and they can adjust their pricing. So, so clearly, pricing the risk is one aspect. The other aspect is also looking at, even after the event has occurred, claims processing. What
yeah.
we are also trying to also do is, claims are inevitable uh, in the insurance industry, and that's why we exist, to cover the claims. But the operational aspect of claims, right? Like if we can cut a few $100 or few thousands of dollars, right? Few $1,000 in terms of in the claims operations aspect. Uh, so I think those costs kind of get fed back
Mm-hmm.
into the policies and into the hands of the customer in one way or the other.
Right.
A very simple also, and also while doing this, right, you can do some good for the society also. One example that we saw in Hurricane Ian was our models and our pictures, etc., showed that one of the houses was extremely damaged,
Mm-hmm.
and the interesting aspect was, why didn't we receive a claims from the property owner? And so then, because we flagged that, the claims adjusters were able to actually call the owner, and
Mm-hmm.
they found out that the owner was not even in town. They were actually in a different state.
Right.
So they were able to, and then we could actually tell them, we were telling them what the damage at their house was and what claim they should file. So, so you're looking at a completely different perspective in insurance,
Mm-hmm.
which increases your goodwill, which increases, the stickiness aspect of insurance for the carriers as well.
Yeah, yeah. I mean, as you mentioned rightly, the cost savings, and that's how we exist, and particularly the underwriting and claims. And I think these two are the main critical element of the entire value chain of the insurance process. And claims, as we know, is a moment of truth, right? And the savings is the most important element in this entire network. And how much fraud that actually occurs on a annual basis, if you look at in a dollar value, that can actually relate to how much important and significant is the claims process for an insurance company, and
Absolutely,
where technology and
absolutely,
analytics can help to reduce that in a way that's, of course, saving a lot of dollars for the company. So I think,
absolutely.
yeah, fantastic discussion, Vivek. Thank you very much for your thoughts today. A true delight to have you as our guest.
No, thank you so much, Surya, for having great conversation, and good luck with all your other conversations. Hope we can build good momentum and gather some good content around.
Absolutely. Thank you so much. And lastly, to wrap this up, thank you for listening, and see you at our next episode. Take care and stay safe. Goodbye for now.